This is a video chart presentation of Desmarais Energy brought to you by allpennystocks.com. Desmarais trades on the Toronto Venture Exchange under the ticker V.DES. You can see this is a relatively low volume stock, 5,000 shares traded. A great move here in September, beginning of October, from around 8 cents all the way up to 24 cents. The important thing is that's holding most of those gains. It hasn't dropped right back down here. It's holding over 50% of them. Closed at 17 cents today. So with this retrace, we're going to take a look at these indicators and see if they're telling us anything. Seeing a little bit of an uptrend in the MACD histogram. The histogram is nice to see, and it also gives us the indication that there might be a bullish cross coming of the signal line. Same way with the PPO. PPO is actually a little bit closer to the signal line at this point. You can also see that this trend is down very low at this point. A lot of times with these low volume stocks, things can be exaggerated, but even when it gets down here near this 10 level, it's always a good point to start to look for a reversal. Now, we're not getting many hints from the positive and negative DIs as they're trending side by side, but I'd keep an eye on this ADX to try and roll back this way, and it tries to add some strength to the direction of the chart. You can see that we have the MFIs are all in oversold level. That's another nice position for them to try and reverse. We're going to look for this 7 to break up through the 14 and 21, and all three of them to pull in unison above 20 come out of oversold levels. The accumulation distribution is kind of in a sideways channel since the regress has been happening, and that's a good thing because you don't want to see this come diving straight down, showing that selling pressure is really strong. It's kind of trending sideways. That's a nice thing. Overall, we're still seeing an uptrend in the accumulation distribution. That whole concept is kind of reiterated by the Chaikin money flow. Down here at negative 0.2, it's not too drastically far away from the zero line. Even on the retrace, we can see that buying pressure still kind of stayed strong. Slipped down here just recently, where the buying pressure finally succumbed to selling pressure. But even at this point, it's not too drastic of a difference. So we'll look for this Chaikin money flow to try and pull back up and possibly equalize back around the zero level. CCI is broken back through negative 100. That's a buy point for a lot of bottom feeders. Overall, we're looking for this uptrend to try and continue. So even if it wants to dip back down, we're going to look for it to bounce off this trend line and continue northward. We also see that the full stow is coming back out of oversold territory. We talk about this a lot of times. It can trend at exaggerated levels for an awful long time, and the move back through 20 is the first sign of any momentum coming back into the stock. Tricks, it's a lagging indicator. It's great for looking at it for long-term divergences, but when a retrace is happening like this, it's always going to be pretty much trending back down. What you look for now is for it to try and make a new high or low. Even if it's somewhere in that area, you want to see us keep trending around the zero line and turn this into a big overall uptrend. With the flat trading today, it kind of flattened out the RSIs as well. See them moving back towards 50. As we always talk about, we want to see all three of them push over 50 and start trending and holding there. You can see how strong it is, even with low volume. When this broke through 50 and they all three went together, it can trade at extremely exaggerated levels. And it all starts with that break of 50 to become a bullish chart. These low volume, low float plays can be a little bit difficult. So a lot of times you have to come back and you have to look at support and resistance and be aware of the fact that they can move very easily with any buying pressure. You can see 5,000 shares traded even on strong days when this was making big moves. The largest day it had was just over 500,000 shares. It's going to see a little bit of resistance right where it is at 17 cents. I'd look for it to be a little bit stronger right through there around 17.5 cents. I think it's going to be basically a whole area of resistance because of this sporadic trading history where it sat flat some days with basically no volume. I think there's going to be a little stair-step resistance through here, through 17.5, 18, 18.5, 19. Obviously, this can make very large moves in one day. If buying pressure comes in, I don't suspect that any one of those levels will be any more difficult than the other. I think they'll all be relatively weak. And what you'll be looking for is this breaking 19 cents. If it wants to get tough, it's going to be there just because it was an old high. We'll be looking for it to hit the parabolic SAR, send that back down to the bottom, set up a new stop and reversal point, and ultimately try and drive its way up near this upper Bollinger Band. Take these moving averages and have them curl and come back up underneath it. You can see it's just barely below the 50-day right now. Extremely bullish charts are trading over top of the 50 and the 200-day. Obviously, the 200-day is well below it, so now what you want to see is the price per share move over top of that 50-day. And naturally, these shorter-term moving averages will curl up underneath it. If these kind of things happen from a technical analysis standpoint, the chart takes on a very bullish approach again. It'll have made its strong move, retraced, consolidated, held the majority of the gains. Then it'll try and see it punch through and make a new high. And if volume stays strong, I think there's a reasonable chance it'll test new highs. I typically never put targets onto things, but that's going to be where the next real resistance level is. There's just not much in through here, even based historically. 17.5, kind of what we said the first real resistance level is. And after that, it's pretty much clear sailing. It's not a blue sky breakout because it still has to challenge this 24 cents, but it won't meet much PPS resistance until it gets up near that upper level. So when it comes to the DES chart, I'm going to look for volume to try and pick back up, push through this level. If it wants to slip back down, bottom support will be down here at 15 cents. I'd like to see it hold that. But ultimately, I'd like to see it try and move forward first and foremost and move above this 50-day because the chart will take on a whole different look. We'll see some of these bullish crosses happen. The chart might try to uptrend all over again and make a continuation move to challenge the old highs. As always, this annotated video chart is merely my interpretation. I'm not a financial consultant and strongly encourage you to do your own proper due diligence. Consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpennystocks.com website to view the full disclaimer disclosure and do not base any investment decisions upon any material found on the website and or this video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching and trade smart.